Hey everyone, this is K.B the Broker. I'm here with Glen Marino today from First Centennial Mortgage. Go ahead, Glenn. Tell them a little bit about yourself, how long you've been in the business, and what it is you do.
Well, it's great to be here today. I'm Glen Marino, branch manager of First Centennial in Naperville, Illinois. I've been in the business for about 24 years now. I'm a CPA by background. Therefore, I'm able to look at both those people that have basic needs for housing financing as well as the more complicated self-employed individuals. So it's kind of been my pleasure over the past 24 years to show people how they can get into housing and be a part of the American dream.
Absolutely, absolutely. This is the guy that I've been telling you guys about. He probably doesn't know it, but I've been telling all of my viewers about this mortgage program that he offers. He basically offers a program where you only have to come up with 1% down. So if you're a first-time home buyer or if you're just a home buyer, this is the guy that you need to go through. This is the guy that can get you pre-approved for that loan. I'm going to let him explain to you guys a little bit more about how that loan works and what do you need, what your credit score needs to be, how much money you need to go, that you need to have to put down, and he's going to go into that right now.
Well, it's quite an exciting program. The new parameters requirements came out in February of 2018. So this is relatively new for people, but what makes it so exciting is the fact that if you look at somebody who might be in a rental situation, they get it. They understand the landlord wants them to put down the first month's rent and a security deposit. So over here, we have an example of somebody giving $1,500 for a first month's rent, $1,500 in security deposit, or say $3,000. They're prepared to, if the landlord where they currently rent says, I'm no longer going to rent to you again, I'm going to have you move on. They go, great, I've got the $3,000, I can move on to another rental unit. However, what they don't know and what they need to know is that if they were to look at, in this example, say a $200,000 home to purchase, the minimum down payment is 3.5%. 3.5% of $200,000 is $7,000. So initially they go, well, I can't buy, I've got $3,000, I don't have $7,000. But what's great about what's called the IDA program, the Illinois Housing Development Authority program, is that they only have to come up with 1% of their own funds, and the rest of it can come from what's called down payment assistance, up to $10,000. So if somebody had to come up with $7,000 in down payment, they only need to come up with 1% of $200,000 or $2,000. And the other $5,000 that they would need for down payment would come from, say, that $10,000 down payment assistance from IDA. So 2 and 5 is 7. They have got all the money for down payment. What's also great about it is the second bucket of cash that they need is what's called closing costs, and that's about $5,000. There still is $5,000 remaining in their IDA program, in their IDA down payment assistance, and that can all be used for their down payment. So in essence, they're coming up with down payment of $2,000. They're coming up with nothing for closing costs, and they're able to buy a $200,000 home for as little as $2,000, or they can stay renters and pay $3,000. Which would they prefer? I think they prefer home ownership and to spend $1,000 less, and again, be a part of the American dream.
The reason why I wanted to basically interview Glenn today is because a lot of people, they would rather much rent than basically purchasing a home. And the whole purpose of this video today is showing you guys how easy it is for you to get into a home. So I'm a home buyer, and I'm a little bit nervous about getting into a home. What is my credit score needs to be, Glenn, for me to get this program?
Great question. Most renters, most landlords are going to require at least a 640 credit score. Well, this program requires a 640 or better credit score, and it requires their income, their household income, to be under 101,520. So I mean, that's a big number. And I would say most renters that you and I come across, Kenneth, they're under 101,520. Mm-hmm. So they need to be aware of the fact that home ownership got easier. Home ownership is there. It's in all counties. You can be a first-time home buyer. You can be an existing homeowner, and you're trying to now upgrade because you got married, you got children, it's too small where you are. This program is also designed for them also.
Okay, so I'm a person that's looking to go into a home, and are you saying that I can only make up to $100,000? Is that what you're saying? So if I make over $100,000, I don't qualify for this program?
Correct. If you make over 101,520, you would not qualify for this program. But again, I'd say a majority of the people that you and I meet with and talk to, they're making under 101,520 as a household, and then this program would come into play and could be very helpful to them.
Okay. Now, here's another scenario. I just had a foreclosure maybe about 5 years ago, or I just got a bankruptcy maybe 2 or 3 years ago. How would that work for me? Am I going to still be able to qualify for this program, Glenn?
You wouldn't be, you still would have to comply with whether it's an FHA loan, a conventional loan, with the bankruptcy and the foreclosure rules. And those are, if you've had a bankruptcy, you're going to have to wait 2 years to come back into what's called the FHA market. If you had a bankruptcy, it's going to take you longer if you go conventional. So let's just stick FHA 2 years. If you've had a short sale, if you've had a foreclosure, the waiting period is 3 years. So that's what I'm going to call the prime market. Then there's what's called the alternative A market, the alt market. The alt market will allow people who've had a bankruptcy, a foreclosure, a short sale to actually come back in and become home borrowers within 1 day after the bankruptcy. But just by the word alt A, you're not going to get the best rate. You're going to have to put at least 10 to 20% down. So, if someone has gone through the bankruptcy and they've been able to hang on to some of the cash and they can put money down, we can do them 1 day after the BK, 1 day after the foreclosure. But be prepared typically to put 20% down and hold on to a higher interest rate. Then after you wait that 2 year or 3 year waiting period, come back into the prime market, refinance, get rid of that high interest rate, and come back in and get a much lower interest rate.
Okay, so you're basically saying that if I have had a foreclosure or bankruptcy, I need to wait about a year or two before I can get a loan?
I'd say wait 2 to 3 years. 2 years for the bankruptcy, 3 years for the foreclosure, and then you're going to be back in the prime market, being able to purchase as if you never had the bankruptcy or the foreclosure.
Okay, so I need a 640 credit score to qualify for this loan.
For the IDA loan, 640. But let's say you didn't need down payment assistance. Mm-hmm. You could go as low as 580.
580
on a regular standard FHA loan. There'll be no IDA down payment assistance, but you can get a good FHA loan at 580 or as low as 580. You can also get a conventional loan as low as 620 on the credit score. It only reaches up to the 640 level once you have to, and you're in need of a down payment assistance of, say, $10,000 from the state of Illinois.
Okay, so say for instance my credit score is a 580, 590. I really don't need the down assistance program. I have a few dollars saved up. About how much money would it take for me to bring to the closing table for me to get into my home? A $200,000 house, that same $200,000 house that we were talking about on your board, about just a roundabout figure.
Well, let's break it down. Every real estate transaction has 3 buckets of cash, and the first bucket is down payment. So let's use 3.5% times $200,000. That's $7,000. So you don't need down payment assistance. You need to come up with $7,000, either your own money or a gift from a blood relative, mom, dad, brother, sister, grandma, grandpa, someone that's a blood relative to you. The second bucket is called closing costs, and that's going to be about $4,500. Now, that typically the realtor can negotiate such that the seller pays that, which then that would not impose on our buyer to come up with another $4,500. Mm-hmm. The lender can pay that in the sense that they would raise up the interest rate, give them a premium interest rate, and then give them a credit for their closing costs. So I see two, when they go standard FHA, no down payment assistance, the closing cost bucket of, say, $4,500 to $5,000, that can be paid by the realtor doing a great job of negotiating, have the seller pay it, or have the lender pay it with a higher interest rate. Okay. And so, to answer your question, I see more people that say on a $200,000 home, they're coming up with $7,000 of their own money and gifts, and then the rest of it, some other entity, lender, seller, is paying closing costs and other costs. So they need to come up with about $7,000 on a typical $200,000 purchase, no down payment assistance.
Okay. About how long do I need to be on my job to qualify for this kind of program, the audit program with the 1% down, basically me putting down $2,000? How long do I need to be on my job for something like that?
You need to be employed. You might be on a job for less. I'm going to say you need to be employed for, you have a 2-year employment history, but you don't have to be on this particular job. If you just got a job last month for 30 days, that's fine. As long as it's in the same line of work or profession, as long as you've been employed for 2 years, we don't want to see gaps of more than 6 months in that 2-year history. And if you're, say, a new graduate, that's fine. You don't need to have a 2-year, your 2-year employment history includes school. So you could have been a graduate that just got an employment letter, got their first paycheck, and you can actually be buying a house 30 days after you graduate because you got an employment letter, you got a job, you got your first pay stub from your employer. That's evidence that you showed up for work, and you could be buying a house within 30 days after graduation.
Okay. A lot of times I see people when they get loans, they have to have a certain amount of money in the bank. Is this the same way?
You need money in the bank when you start to get into what I call investment properties, and there's primary residences, there's second homes, and then there's investment property. For a primary residence, going FHA, going back to our example, as low as 580, only 3.5% down, they don't really have to come up with any cash reserves. They could literally spend their last penny that's in the bank getting into the home, and they would be fine. As they move over from a primary residence, say, to an investment property, a rental property, that's when all of a sudden you're going to see that they might have to have 2-4 months worth of cash reserves in order to get their loan approved.
And that's very good because I had a deal a little while ago, and someone they needed like maybe $5,000 or $6,000 just to show in the bank account. So with you not having to have any money in the account, that's a really, really good thing. The next question that I have for you, Glenn, is what kind of paperwork am I going to need? So say, for instance, I give you guys a call and I say, hey, I'm ready to get pre-approved. I'm ready to just go ahead and try to get a loan. What kind of paperwork are they going to ask me to submit? What do they want? How can I submit it? How can you guys get the paperwork for me? What am I going to need?
Well, what's great about technology, Kenneth, is that we've made the process much easier, much faster. Many of our realtors, including yourself, have what's called the FCM Express app. It's an app on the phone. And you and I share it with clients. So if a client said, hey, I want to get pre-approved, I would share the app with them. On their phone, they can open it up. They can do the application literally on their phone. Then what they do is there's a scan button that opens up the camera on their phone. And all I need for paperwork to get them pre-approved is I need them to shoot a picture of their W-2s.
Wow.
I need them to shoot a picture of their pay stubs. And I need a picture of their tax returns. So literally right from their phone, they're doing that. And it uploads with their application. It comes to us, and we get them pre-approved then within 24 hours.
So you need my check stubs, you need W-2s, tax returns. Is there anything else that I'm leaving out?
No, you got the complete picture right there. For pre-approval, we don't want the rest of the documentation. That bank statements and driver's licenses and all that stuff, that can come after they've gone out shopping with you and found their dream home. But to get pre-approved, do the mobile app, do the online app, then shoot pictures of your income documents, send them in. We'll get you pre-approved within 24 hours.
Okay. Now, with the VA loans, well, if it's a senior or somebody like that that's a little bit older, is it anything different from those individuals, or is it still about the same way?
Well, what's great about with VA loans is that it's a 0% down program. So going back to our example of that $200,000 home, well, 3.5% isn't applicable. There is no 3.5% down payment, that first bucket of cash. It's 0% down. So they literally have to come up with 0 down.
So if you're a VA, you can get a loan for 0 down.
And then the second bucket is closing costs. And if the realtor negotiates that the seller pays the closing costs or the lender pays the closing costs because we raised up the interest rate, their second bucket of cash is 0. So there's some veterans out there that have bought homes with no money.
Wow.
That's really exciting for them.
Wow.
And there's also less closing costs on VA loans by about $1,000 a month, $1,000 at the closing, because certain closing costs cannot be put onto the veteran.
Okay.
The seller has to pick up those costs.
Is that just for veterans or senior citizens also?
It's strictly for the veterans. Strictly for the veterans. Again, there's no special programs really out there for the seniors other than what we call reverse mortgages. So if somebody is 62 or older, they can, if they have equity in their home, come to us and we can annuitize that equity and help pay them a monthly amount, just like they're receiving Social Security, of, let's say, $1,000 a month in Social Security. And they can get a monthly check deposited into their bank account through a reverse mortgage. So that's kind of the specialty program that would be out there for the seniors.
Okay, so that sounds really good. The last time I was with Glenn, we were talking about basically if you're already in your home and you have a really, really high interest rate or a high mortgage, you want to get that mortgage down a little bit, get that interest rate down a little bit. He was telling me about a little bit about that. I want him to talk about that right now. Talk about so say for instance I'm in a home. I've had my mortgage for maybe 15 years. I have a really really high interest rate. My interest rate is like maybe 12%. I'm paying them. I have a $200,000 mortgage, and my mortgage is, astronomical. It's maybe 14 or 1500. Is there anything that you could do to help me, Glenn, with that?
Well, with those people, we try to find out there's why haven't they refinanced? I mean, obviously rates were down in the high threes at one point in time. Now they're in the fives, low fives. So interest rates have gone up, and yet we still see people that have higher interest rates, and so we really have to ask them. Why are you holding on to this higher interest rate? I see three factors that could be. One, they don't have good credit at this point in time, so they can't refinance. Mm-hmm. Secondly, they don't want to refinance because they need to really talk to you because they're candidates. They're saying, I'm selling, I'm getting out of Illinois, I've had this house for 15 years, I'm ready to go to warmer climates or wherever they want to go, or just downsize, stay in Illinois and just downsize. So they go, I don't want to incur the $2,000 that it's going to cost to refinance. And the third one is, they're just creatures of habit. They got an auto pay, they don't want to go through the paperwork. But just like I said, it's become so much easier with today's technology with, applications on their phones and with, being able to scan and send documents to us with their camera and their phone, that we encourage people with high interest rates, get off the high interest rates. If you're above, say, 6% today, it's worth a phone call to us to find out, how much of a reduction can I have in my monthly payment in order to save monthly cash flow?
Okay, absolutely. That's basically a question that I wanted to ask for you guys that already have homes and, you're paying this high interest rate and you're thinking about maybe refinancing. This is the guy that you definitely need to talk to. One more question before we wrap up, Glenn. So we're in Chicago. Well, I'm in Chicago. He's in Naperville. I'm out in Naperville right now, his office. If we started on the deal today, let's just say for instance today is October the 1st, and we started on the deal today, how long do you think it would take me to close and get the keys to my home and move in? If I gave you all the paperwork that you needed, how long does this process work? How long does it take, I mean?
Well, it's a great question, and I think you said it best. If I'm motivated, I want to become a homeowner, I'm excited about that whole process, it typically will take 30 days for us to go from the time that you sign the application, send in your documentation, because there's going to be an appraisal, there's going to be the seller's going to be ordering title. There's a few steps in the manufacturing process to get you to the closing, but it's typically 30 days. Have we done it in less than 30 days? Yes. If somebody says, Glenn, I found the dream house, that I've been looking for, but the sellers are insisting it's October 1st, we got to get in there by October 21st. Can you get this done in 3 weeks? We'll move heaven and earth if we have to in order to get you in there by the 21st. But typically, if we've got a very cooperative buyer on our hands, we're done in 30 days, and we're sending them to the closing, and everybody's celebrating with when's the next barbecue.
Absolutely, that's one of the questions I want to ask because me being a realtor, I've seen deals where they've taken 45 days. 2 months, sometimes 3 months in some cases. Sometimes the deals fall apart. And the thing about Glenn is he's getting deals done really, really quickly. And, his office, they call me at least twice a week, and they're very, very good on the phone. They answer the phone. A lot of these guys, they don't even answer on the phone. They're in the office like maybe 2 days, 3 days a week, and you can't even get them on the phone. And I'm one of those people, if I'm doing something like buying a home, which is a really, really big deal,
Absolutely.
which is a really, really big purchase, and if I have a question and I want to ask a question, if I want to get a real person on the phone, not a voice message, not a prompt, I basically want to talk to somebody and ask the person, hey, well, what's going on with my deal? Where are we at? When will we be going to the closing table? I just want to be able to get somebody on the phone, and I think that First Centennial is a really, really good company to go with. Before we wrap up, Glenn, is there anything else extra that you want to add? Just anything about the business? I don't know. Maybe it was some things that I didn't go over. Is there anything else that you would like to add?
No, but I'd like to add to what you just said, because I thought that was a very important comment that you made. When someone's buying a home, I mean, it is the biggest asset they'll probably have in their lifetime, buying a home. And there's a lot of anxiety. There's a lot of, I don't want to make a mistake. I don't want to look foolish. I don't want to look stupid. So one of the things that we do here is as their loan, they're going to sign a loan application, it comes into us. They will get video updates, and the loan officer here, my team, they get assigned to two people, me and one of my team members. So they have more than one person to talk to.
Team.
And we send out what's called video updates. We're automated that when their loan application goes from the loan officer's desk to processing, they're going to get a video up. You're going to see your files moving. When it goes from processing to the underwriting department, they're going to get a video update. When it comes out of underwriting with conditions, you're going to say your loan has been approved with conditions. When you get clear to close, they're going to get another video update. So they're going to get video updates and phone calls once a week on status. That's going to make them feel a little more comfortable, a little less anxious. And I think the communication is extremely important whenever somebody's buying a home.
Absolutely, absolutely. How can people get in contact with you, Glenn?
They can get in contact with me here at First Centennial at 630-983-3600. My private line is 630-983-3604. And my email is g.marino@gofcm.com.
Absolutely. And my information is, if you want to go visit our website and view homes for sale in Chicago or surrounding suburbs, again, our website is www.shbainfo.com. My cell number is 773-808-4321. We also have a Facebook group for first-time home buyers. I'm going to put that in the description below. I want you to like this video. I want you to share this video because we're trying to go viral. And I want you to subscribe to our page. And that's basically going to be our video for today. This is Glen Marino for First Centennial Mortgage. I'm K.B the Broker. I'm going to be your real estate broker. I'm looking forward to working with you, looking forward to showing you your homes and moving you into your dream homes. And give me a call. I'm ready to work. And he's ready to get you pre-approved. All right? That's pretty much it. That's our video for today. And I will see you on the next video.
Bye now.
Bye-bye.